right, everybody. Appreciate your attention. While Jimmy gets everything ready.
Ready to go.
If anyone asks any questions, we'll just always repeat it here in the mic so
Sure.
people online can jump in. For any of y'all who don't know me, my name is Jonathan, and I'm the founder of Quality Builders and the host of the Chicago Quality Investors Meetup. I'm always super grateful for everyone who shows up this morning. Probably most grateful for Jimmy, who's substituting in last minute for his partner, Zach, and always Emran Khan, who is our host here. He's also the owner of All Tech National Title. So if you need any help with your attorney work or title work, Emran is the man to call. They have title closings that they can do in 31 different states. And so I'm always pushing for people to work with him so that way he continues to let us use the space. I'm always reminding everyone, these in-person events are probably the most important thing that's changed my life. There's something different about meeting people in person. Energy is different, and you just make the connections that you need on your real estate journey. I'm always trying to promote giving as well. Is anyone working at a job right now that they maybe want to end up quitting someday to do something different? I think you screwed over it a little bit this way. All right, my friend, talk to me about it.
My name is Kerry Jones, and I'm a general contractor, and I've been rehabbing houses for 30 years. And I really want to start working for myself and buying my own properties and doing my own deals myself instead of making all the investors rich. Like, wow. At the end of the day, I have 2 other grandkids. I just got grandkids, and I want to have some legacy for my grandkids.
Beautiful.
I gotta start flipping my own properties like I've been doing 30 years for other people.
And it was Kerry Jones. Okay, beautiful. I got this book for you. It's called The Quitter's Manifesto. So some steps you can take to exit your job, my friend. Come grab that whenever you want. But yeah, my tips are always the same. Oh, and one other thing too, I've got some QR codes out here. I'm the board of directors of the True Value Boys and Girls Club. So if you are willing and able to make a donation, we got their Youth of the Year program coming up in November. And basically the Youth of the Year program just allows one of the youths from the club to go and speak. They speak to the club first in a room of about 500. And then the winners actually go to Navy Pier, and then they present to a group of about 2,000 people. So if you can, QR codes are back there. Really appreciate it if you can drop a donation if possible. Lastly, I just always touch on the 3 steps that I believe make all of us successful, which is educating and learning, which is coming out here. Number 2 is networking, finding the right people on your team, like Jimmy, like Emran, the right people who are going to take you to the right places, who are doing things the right way. And then most importantly, I'm always just reminding everyone that taking action is probably the most important step that can easily get overlooked. And I know for myself, it was very easy to get into the analysis paralysis, but once the train is moving, it's a lot harder to stop it. So I'm always encourage people to take action sooner rather than later. So otherwise, yes, I've got my awesome and new friend Jimmy here. Jimmy Sarnoff with Sarnoff.
You got it.
Tax.
Yep. Sarnoff Property Tax.
He's the owner, so he's substituting in for his partner, Zach. So really happy to have you guys here. You guys kind of work with everyone in the tax appeal space, specifically here in Chicago. Can you kind of just give us a little bit better background than me on
Sure.
What you guys are doing?
So Sarnoff Property Tax, we've been around for 38 years. We handle all types of asset classes from commercial, industrial to residential properties. We handle the entire state of Illinois, not just Chicago. So we're all over the state of Illinois. heavy focus on Cook County. That's just where a lot of, people have a lot of assets, and but we're in all the collar counties: DuPage, Kane, Will, Lake, and then we go downstate. So we're all over the place, and can work with somebody who owns a single family home to all the way to a huge, office building in the Loop. So I'm here to educate you all on how you can lower your taxes today, I think. And if you have any questions, please feel free to shout them out.
Really quick before we get into the taxes, what was your life before property tax? How did you fall into this? What's
Sure.
the kind of backstory for you?
Sure. So I grew up in the northwest suburbs of Chicago, and attended New Trier High School. And from there, I went to Syracuse University with focus on speech communication, knowing I wanted to go to law school, not really knowing that I wanted to come into property tax law. My father started Sarnoff Property Tax. It formerly was called Sarnoff and Bakash. We recently rebranded, and my father's partner had retired quite some time ago. I'm now the managing partner. I've been there for about 21 years, 22. And so it was more of a family thing, and getting the opportunity to work with my father, who, I'd always watched him grind and build this firm. And so, I always envied my dad as my hero. And so when I graduated law school, I said, you know what, I'll go work with him for a little bit, after learning that I wanted to work in real estate like most of you in this room. And I had just grinded through 3 years of law school, and I was like, I got to make some money here. So I went into, I decided to practice first, and then I just kind of fell in love with the idea of being a lawyer. So
I've always heard that it's tough to work with family. What was the biggest challenge starting off working with your father?
It's funny. I've been in groups. I used to be in a networking group of family-owned businesses, and I found that I have been extremely lucky through my life. I have a father who was always willing to hear my ideas and let me run with them, which is something that I'll pass off to my own kids, whether I failed at that or not. So, the challenge for me, I would say, would be being the son of the guy. You're trying to get respect from the other people in the office, and not just being, daddy's boy kind of a guy. So that what I would say would always be the biggest challenge, but I always faced it head on by grinding and working. And I was like, I got to learn it better than everybody else. So my father, the best thing that he did for me, and I was really upset at the time, he had me start at the bottom. I mean, at the bottom. I graduated law school, and I was sitting there doing forms and running across the street like a runner would at a law firm to the county building, and just kind of pushing paper. And so, but he wanted me to learn every aspect of the business, so that way I could know every single thing. And my father actually used to work for McDonald's Corporation way back in the day, prior to his starting our practice, and he worked directly with Ray Kroc. And he would say that Ray Kroc would walk into a McDonald's, grab a mop, and start mopping in front of every single person there to say, if I can do this, you can do it. And so that was a big lesson for me.
Ray Kroc, his story is amazing too.
It's an unbelievable story.
Yeah, his book is on my list of founders books for sure. And there's a really good documentary on Ray Kroc. I don't know if you've seen it, but if you guys haven't seen it, it's definitely worth checking out. So you got into the tax business. Can you talk a little bit about, since you've been in for 21 years too, can you talk a little bit about how it's changed over that time period? How it was when you started versus how it is now, and then we can probably kind of dive into like the basics of property tax and how it works.
For sure. It has changed quite a bit, not just through technology, but through personnel within the assessor's office and the Cook County Board of Review. So I don't know how familiar everybody is with the Cook County assessor and the appeals process here, but there's 38 townships in Cook County, and every township has its own filing deadline. First level of appeals is the Cook County assessor level. Then we go to the Cook County Board of Review. Then on top of that, you still have an opportunity to appeal after taxes have been paid to the Illinois Property Tax Appeal Board or to the Circuit Court of Cook County. So there's 3 levels of appeals. So there's changes within each one of those dynamics, but the biggest changes have really come through the Cook County Assessor's Office. I myself have only worked through 3 assessors, And my father's been through like 7 assessors. So, you know, everybody's a little bit different in how they manage the process. Fritz K, who's the current Cook County assessor, has probably been, in a friendly way, is the most difficult in terms of, you know, getting relief from the Cook County Assessor's Office. Typically, back in the day, under the Joe Barrios regime, the relief would come from the assessor's office, and then you go to the Cook County Board of Review kind of like as your backstop. And, you know, Fritz K, he has done some good things, and then there's been some things that a lot of people question. So like any other person in politics. And so Joe Barrios was a very good assessor. He had really good people in the office. And so people had a really clear understanding of how things would go. You know, now it's a little bit, the transparency which we used to have is not as great as it used to be. You know, so like people come to us and say, hey, how's this property? If I buy this property for, you know, $15 million and it's a huge multifamily building, what are my taxes going to look like? You know, 8 years ago, we could sit there and say, hey, this is probably where you're going to end up based on the income, based on everything, based on the purchase price and all that. Now it's a lot more difficult to do that. But we use the Board of Review is now the place where we're really getting the bulk of our relief. And so the Board of Review, we do a Board of Review analysis as to how they will look at the property. And that's pretty much what we go off of. So, you know, the thing about Cook County that people don't realize, which is actually a good thing, is there's a lot of checks and balances. So, you know, I'm on the board of directors of the National Association of Property Tax Attorneys, and I deal with property tax attorneys from all over the country. And every system is not perfect. I can tell you that right now. You go to Boston, people from Boston are complaining. You go to New York, people from New York are complaining. California, it doesn't matter. Nobody has a perfect system. So, you know, we all have to deal with our changes and stuff.
So can we back up and just go through the basics? Like, so I buy a house,
Sure.
I have to pay taxes for that house. Just walk me through. I don't know anything about property tax. How does it work?
Sure.
Who do I pay? How does
Sure.
it get evaluated?
Sure. Great questions. First of all, I forgot to mention that houseappeal.com, that's our residential appeal website. So if you ever have a house or something, you just want to sign it up very fast, all you have to do is go to houseappeal.com and you can sign up the house online. You'll get a DocuSign right then and there. You're in our system, boom, boom, and we're turning and burning an appeal for you. When you're looking at a house, okay, you know, the typical situation is you're with a broker and the broker takes you to go look at someplace and then says, hey, the taxes are going to be X. All right. Well, that's taxes are probably on a listing sheet and they're probably old data in there. Oftentimes it could be taxes from the year before. So the best thing you can do is always talk to somebody like myself and say, hey, I'm looking at this property. It's going to cost me $200,000. Right now it's taxed at X. Is this where it's going to shake out? Well, the first thing that we do is we pull up the current assessment and gets us to our market value. So in Cook County, all residential properties assessed at 10% of market value. Okay, so if you have $100,000 assessment, if you go online and look at cookcountyassessor.com and it says $100,000 assessment, that means the property is valued at $1 million. Okay, if you're buying the property for $800,000, right then and there, you know that you should be able to get relief on the property down to that $800,000 in a market value sale. So then you could say, okay, I'm buying this thing for $800,000, which equates to an $80,000 assessment. Okay, to compute your taxes, you take the assessment times the equalization factor times the tax rate. That's the formula for computing taxes. Assessment times equalization factor times tax rate. The equalization factor is a number that's determined by the Department of Revenue. It is a county-wide number in Cook. Everybody has the same exact equalization factor. Right now, I believe it's 3.0164. And so whether you own a condo unit or whether you own a huge, massive building, same equalization factor for everybody in the county. Then you have the tax rate. That's what's levied by all the taxing districts, the school districts, police, fire, all the stuff that we pay for and enjoy as taxpayers. Okay. So those three elements get combined. The tax rate, though, is what really is upsetting and driving a lot of taxpayers. So you go to the south and southwest suburbs of Cook County and you go to a place like Dalton, Illinois, you're going to see tax rates in like the 30 percentiles, insane tax rates. It's absurd. Okay, then you come to the city of Chicago, which enjoys like a 7%, 7.014% tax rate because there's so many parcels of property. It's all based on how much property there is. So the bigger the tax base, the lower the tax rate. And that's why a place like Dalton out far in the south and southwest suburbs gets crushed. And so you have these houses that are worth not much getting taxed at the same levels as houses that are gorgeous in Lincoln Park. It's insane. So, but in terms of looking at your taxes, looking at your purchase price right away is the key. So where's this purchase price going to shake out? So if the guy's got it at $1 million and you're purchasing it for $1.2 million, okay, you might expect an increase down the road potential, okay? Or you might look at, hey, I'm purchasing for $800,000 and you might be able to get relief on it. They don't go chasing purchase prices. So every 3 years in Cook County, your property gets reassessed. So I've spoken to some of you already today. But so right now the entire city of Chicago is being reassessed. So when I spoke earlier, I said there's 38 townships in Cook County. There's so many parcels of property that they can't reassess every single property every year. They split the county into 3 groups: the north and northwest suburbs, the south and southwest suburbs, and then the city of Chicago. So this year, the city of Chicago, which is comprised of 8 townships, is all being reassessed. Next year, it's going to be the north and northwest suburbs, and then it's going to be the south and southwest suburbs. A lot of times when you're purchasing a home, the timing matters. Okay, so if you purchase that home and it has a higher market value than it's currently assessed at, okay, and it's just about to get reassessed, that purchase price can definitely be taken into consideration. So, hey, maybe you wait 2 months until the assessment is published, and now that assessment's known, they haven't seen the purchase price, and they're not going to go chasing it. They can't chase purchase prices. So they're not going to go and change your purchase, your value based solely on the purchase, right?
What does that mean? They can't chase purchase prices?
So-
You mean the assessor, right? When
Yeah,
they're going
the
to
assessor is
assessment.
not supposed to chase the purchase price. So that means that like the second you buy a house, if you paid $1.2 million and it's assessed at 1 million and the assessment's already published, they can't go back and change it to 1.2 million. Okay. So that assessment should remain in place. The 1 million should remain in place for the bulk of the triennial, for all 3 years of the triennial.
So do they have specific criteria that the assessors have to follow when they're doing their assessment that would be different from what you guys are doing when you're appealing? Or should it be the same in
So the
theory?
assessor looks at sales within the area.
Okay.
And then each property has its own classification for residential. So, you have different classifications based on age, size, location, age and size and characteristics of the property. When it comes to appealing, we are taking the assessor's data and then kind of trying to find comps that are better. We do what's called a uniformity study, and we compare the subject property, okay, to the houses in the area based on age, size, location, all the characteristics that he uses, and we try to find comps and say, hey, you have this house at X, we are seeing all of our comps are at Y, all right, and we want to be with Y. And so that's really our argument. And so then also we'll look at sales of properties in the area as well.
Do you know what your percentage of getting appeals approved are?
We always get asked that question. Now here's how I answer that question. If we don't have good data, we're probably not going to be filing the appeal. And we'll tell our client, hey, at this time we find your property be fair. Okay. If we have good data, we're getting very good relief and we're getting great percentages. I've actually we have so many appeals in a given year that we've never actually done the percentages of relief. It's high. I can tell you that. We work on a contingency fee, so we only charge if we save you money. So we're in it together. So we want to push hard too.
What's the difference of what you guys do and what a non-lawyer company? I know a lot of mortgage brokers that actually have signed doing what you do.
Sure.
And then also the free, not really free, but the alderman offers it in his office.
Sure.
Do you do a different process?
Yeah.
It's all the same thing.
So here's the thing. There's something called UPL, the unauthorized practice of law. Okay. And there's 12 counties in Illinois that now subscribe to that. And anybody can appeal to the Cook County assessor level. Anyone. You can sign somebody up right now and help them appeal their property taxes. You can't go to the board of review for them because you're not a lawyer. Okay. You can't go to the circuit court of Cook County for them because you're not a lawyer. All right. So that's the difference. And so, you get one little step at the assessor level and that's it. So, we're one of the largest firms in the city of Chicago that does this kind of work. It's all we do. And so we're also looking at law and a lot of stuff. Sometimes there's issues in law. It's not just saying, hey, here's a simple uniformity study. So, you know, when we're dealing with large properties, we could be dealing with an incentive and or something like that, and they're applying the law incorrectly. So there's a big difference. In terms of the alderman, most of the alderman offices are trying to teach like a DIY, do it yourself kind of situation and being like, hey, this is how it's done. And listen, I have no problem with people doing their own taxes. It's, you know, if you can do it, go for it. I was telling a woman back there before, I could paint my own house. All right. I'm not going to do a good job. The color is going to change, but it's going to get nasty. So, you know, you can spend the time to do it, or you can hire somebody to do it for you. And so, you know, the benefit with us, like I said earlier, we're contingent fee. So we're only charging based on savings. So there's nothing to lose.
So it's a percentage of the savings.
It's a percentage of the savings.
Yeah, I think that's the key. You know, it's like, I know for me earlier on, especially like when you're getting going and investing, it's like you want to do a lot of things on your own, thinking that you don't have the resources or assets or whatever it is to hire someone. What I've actually found to be true is the opposite, is that the more people I found who were really, really good at what they do and let them do
Yeah.
that, especially on a contingency basis where it's like he's not getting paid unless you're getting money back. And so it's like, in my opinion, why would you even want to waste your time trying to figure that out? Like taxes is the one thing I don't want anything to do with. You know, it's just,
it's the time value of money.
Yeah.
And so you can say, I can spend my time trying to figure this out and do this, or I can go out and spend my time looking for a new house that I'm about to flip and do whatever. And so, you know, it's where do you want to spend your time? And if, you know, there's a reason that people hire people to do things. So it's the same.
I guess as far as like super unique situations, is there anything that comes to mind where things have just gone not the way you expected them at all, and you had to go through more hoops or fires than you ever had before? Is there any specific?
I mean, I don't really have a specific example. Once in a while, you have something where you know, you think you have like a case that's just like slam dunk, and all of a sudden somebody's, you know, on the reviewing side, and you get a no change, and you're like, how is that even possible? You know, you might have a matter where the property's been sitting vacant due to like a fire or something, and then they don't give the vacancy relief, and somebody just didn't read through it correctly. But that's why we have the checks and balances, and you can go to the board of review and, you know, have another look at it, or the Illinois Property Tax Appeal Board or the Circuit Court. So it's yeah, I mean, listen, there's times where things can get annoying. But for the most part, when we're appealing, you know, you hope that they're reviewing it correctly. And I can't think of any specific example off the top of my head of recent stuff, but
Well, and so just to confirm, so there's 3 different places that you can appeal to. You start with the,
so in Cook County, yes. So in Cook County, you start at this Cook County assessor level. So the Cook County assessor, let's just start from the beginning of the process. The Cook County assessor right now just sent out assessments for North Chicago Township. That's like your Gold Coast, all that area, the north side of the loop. And so those assessments just published. We have 30 days to file our appeals. Okay. And then our appeal will be reviewed by a reviewing officer. We'll get a decision typically in about 3 to 4 months of the time from the time we file our appeal. After the assessor closes North Chicago Township, it opens the opportunity for the Board of Review, the Cook County Board of Review, the second level of appeals, which is a 3-commissioner board, and they all have their reviewing people. We can file our appeal to them. So let's just assume for a second we have a property that's $500,000 market value at the Cook County assessor level, and we come in. Are we talking single family home?
yeah, single
Okay.
family, sure.
So we have a property that's assessed at $500,000 market value, and we do our uniformity study. And we find that let's say we got an appraisal done too. Sometimes we get appraisals too. And we have an appraisal that comes in at $300,000. Our uniformity study is showing a market value of $320,000 or something like that. And we get relief from the assessor level. Hey, Assessor Katie, we think this property is assessed should be valued at $300,000 in line with our appraisal. And that's our argument and our uniformity study. And they might come back and say, great, we're going to lower it to $450,000. So we got our market value lowered from 500 to 450,000. Well, that's not good enough. All right. So now we're like, all right, well, let's tell our client we got some relief, and then we're going to file to the Cook County Board of Review. So we go to the Cook County Board of Review when they open North Chicago Township. and we'll fight again. But now our starting point is 450,000. We'll resubmit our appraisal, resubmit a new uniformity study and say, hey, assessor gave us this. We still feel that the property is worth this value. And at that point, you have an opportunity for an actually in-person hearing where you can present evidence and talk, and maybe you leave there and they say, okay, great, we agree with you. The property should be assessed at let's go with 380,000. Okay. And so we're like, great, we got this thing down to 380,000, but we still have evidence supporting a market value of 300,000 for an appraisal or 320 for our uniformity study. So we're there, but we're not all the way there.
Mhm.
And so now at that point, second installment property tax bills will publish. So property tax bills are in 2 installments. Okay. First installment bill comes out in February to March. That's always 55% of your previous year's total. And then the second installment bill comes out in July to August, and that's the remaining portion of your tax bill. So now, after we've finished at the board review, we've told our client we've gotten you down to 380. Your tax bill for 2024 is going to be this amount. But we still think that we can get more relief for you, but you have to pay the bill in the meantime. Okay. So now we filed a matter to the Illinois Property Tax Appeal Board, often referred to as PTAB. And those matters can take like 2 to 3 years to adjudicate. So it takes a long time, but any relief that we get comes back in the form of a refund now because you've already paid the taxes. Okay. So then we'll get a check to our office from the county based on what we negotiate at the Illinois Property Tax Appeal Board level. So we're always pushing. So maybe at the PTAB level, the PTAB maybe agreed with us and said, okay, you were 380. We think that you should have gotten 340. All right. So now we end at 340. We're able to send our client a check for their overpayment. And that's it. So and that's a typical process on a simple.
Back will they go on? Yeah. Refund.
So the question was just how many years back
Sure.
will they go for the refund?
So that's a good question. So there's something called a certificate of error, which allows you to work backwards. Okay, but they're very difficult to get because there has to be a mistake in fact or law. And so you can't just say, hey, I didn't appeal my taxes. I want to go backwards. Okay. It doesn't work like that. If let's say there was a fire in a building and the person didn't appeal, that's a different ballgame. They can go and say, hey, I had a fire in this building. I didn't appeal my taxes. I didn't even know about this or whatever, blah, blah. Or there was a mistake in the size. All of a sudden I noticed that you guys are charging me at, a 2,500 square foot home, but my house is actually 2,000 square feet. Okay. Then you can go back and say, hey, this house has been mistaxed for years. You can go back 3 years.
3 years?
Yeah, and a certificate of error. But you can't, like I said, you can't just plead ignorance and say, hey, I missed the chance to appeal. I want to appeal these things for, tax year, 2022.
They don't have any exemptions on that rule?
No.
Elderly or?
No.
Okay.
And they have exemptions for the elderly. So that's another thing, if you're, so we're always checking as to making sure that all our clients are getting their property tax, their homeowners exemption, their senior citizen exemption, senior freeze exemption. So there's all different types of stuff that you can get, but you can't just go backwards. So
On the senior freeze, do you have to get the senior exemption first? And then
no, you can get one of it doesn't matter. So you can apply online, the senior exemption and the homeowner exemption. Once you apply, they're automatically going to apply it each year. The senior freeze is based on income. Okay. So the senior freeze is actually something that you have to reprove each year. Okay. And the senior freeze, what that does is it freezes the equalized assessed value of a property. But they need proof that your income hasn't changed within a given year. So I don't know what the actual income limit is right now. But I think it was like 65,000. I don't even know. But that includes all retirement accounts, everything. So we don't handle the senior freeze exemption for people. We tell you how to do it. Because I don't want to collect people's income and all that stuff. That's out of our wheelhouse, and they can go to the Cook County Assessor's office and actually do it in person. And I don't want to charge somebody to do that. It's not that hard to do. So.
Following up on the freeze, does it freeze it at the current EAV? The equalized assessment, does it freeze it there?
Yeah. So, yep.
Does this apply to vacant land?
What apply to a vacant land?
The assessment.
The whole process, or so vacant land is a good question. So vacant land is something that it depends how you're looking at things. First off, if you're knocking down a building, sometimes let's say you have a building that you're just holding on to and it's vacant or something like that, and it's just sitting there dilapidated, doing you no good. Oftentimes we'll tell our clients knock it down so you're not getting assessed an improvement value. Okay, because there's two things that go into to calculating your assessment. It's the improvement value and the land value. And so once you knock down that improvement, now you're just getting assessed a land value. And so, let's say you have a commercial building, commercial buildings and industrial buildings get assessed at 25% of market value. So we're in my example earlier, when I said that a residential property gets assessed at 10% of market value, you have a commercial property at 25% of market value. So if you knock down that building, okay, you're knocking off a significant portion of your tax bill. Now there's all different sorts of incentives for the commercial and industrial world too that we do based on vacancy and all that stuff. I just didn't know how much you guys want to get into the commercial and industrial. I can go anywhere you want.
With commercial, do you classify anything over 5 units as commercial in multifamily space, or is that classified the same?
So multifamily 6 unit. Okay, that's a good question. So 6 units and less, okay, is they look at it like a single family home. That's how they look at it when they're assessing a property. They base it on uniformity. Okay. When we have properties that are 7 units and above, then we can start arguing the income of the property. So it's a totally different argument. So if you own a 6 unit, 6 flat and under, when we go to appeal it, we are looking at the uniformity of other 6 flats in the area. Okay. Just like we would an analysis on a house. When we are doing a property that is 7 units and above, okay, now we're allowed to use the income of the property as an argument. So that is a totally different type of an argument. We're saying, hey, to our client, we'll say, please send us your rent roll, your income and your expenses. We come to our own value based on that income. And now we say, okay, this property is assessed at $1 million, but the income is only supporting a value of $650,000. And then we sit there and we present the income to the assessor's office or to the board of review, and they will look at it as well and say, okay, you're right. This property is overassessed based on the income. It's just not supporting it.
So anything under 6 units, it's only based on like the age, size, location.
Correct.
Not at all about the rental income.
They will the only way to have income reviewed on a 6 unit or less is to get an appraiser to appraise the property, and then he'll look at the income of the property and it'll be part of the appraised value.
Okay.
What is that? In real estate investment and real estate brokerage, it's 5 and above or commercial. You don't use a CMA, you use the income method.
Yeah, I don't.
Why are they doing 7?
7 units, 6 units and below. I'll tell you why, because they have so many appeals to review. They can't get through it all. There's just too many. And so it's really the reason. They used to look at the income of these things, and then they just stopped. So that was one of the changes. If you want to go back to your question about what has changed. So 6 units, they used to look at income on smaller properties, and now they just don't. But we use vacancy as a reason for relief too. So if you have a property, that's sitting there, 80% vacant, we'll get vacancy relief for you. Vacancy relief, just so you're aware, is for 1 year only. So when we get relief for a property, let's say we get relief on a property in North Chicago Township, the savings should endure for all 3 years of the triennial. So when we lower taxes on something, let's say we've got taxes down to $10,000, well, that 10,000 should stay the same for the next 3 years, minus changing the equalization factor and tax rate change each year, but that assessment should stay the same for those 3 years. When it's based on vacancy relief, we have to reprove the occupancy annually, which is totally fair. You can't get vacancy relief and then all of a sudden, you have a full occupied building and you're trying to get vacancy. So.
Yeah.
So if you have a 6 unit and you had another apartment, let's say in the basement, that changes it to a 7 unit?
Yeah. Oftentimes they don't see that. Yeah. So the question was, if you have a 6 unit property. Well, are you saying it's 6 units or 7 units? And how does the assessor have it?
Yeah, I guess that's a good question. It's like when I go to do a renovation and I went from 6 to 7 units, I submitted my plans. I got a full unit legally, went through zoning and through planning, when does it actually get to the assessors that another unit has been added?
Well, they should pick up from the permits and all that stuff.
Okay.
And they should be able to see it. I mean, you shouldn't be lying on your rent roll either and saying you're still 6 units when you have 7. That's fraud. You should, you don't, you want to be able to see, you shouldn't commit fraud, is what I'm saying.
Telling yourself either, I mean,
Sure.
7 unit is going to be at a higher tax rate than a.
Yeah, it happens quite
Why would
often.
you tell it?
Yeah.
Paying, east of the city for 7 units, it's gonna go through everybody. It's gonna
Eventually.
know that it's-
They should see it. They should see it, but you're still supposed to follow, if you're gonna go file an appeal, you can't lie and say it's 6 units. Now you're saying, just stay quiet. So,
Another good question we had online was when you have a commercial property, what cap rate are they using? Are they to use cap rates if
Yes.
it's over?
so it depends on the age and location of the building. We're seeing stuff anywhere from 6% to 7%, depending on what you're dealing with. But and those change each year too. A lot goes into determining what cap rates they're going to use, but we typically find out at the beginning of our hearing process. But like a cap rate on a property in Rogers Park could have a very different cap rate on a property in the Gold Coast.
But those cap rates are public information. Like I could go find them too, or
You can figure it out. You can
Okay.
figure it out, but call us and we'll go through it. Yeah.
Yeah, no, I'm saying.
You're not going to see anything. The
They're not
assessor
gonna
actually,
share what they're
well, the assessor actually publishes a report.
Oh, okay, that's awesome.
So you can look at on the assessor's website and publishes a report as to what he was pretty much using.
Okay,
so.
that was what I was curious about.
Yeah.
When you have, let's say you're doing something like Jonathan was saying, let's say you buy a property for $400,000, you add value to it. Now the market value is $800,000. You've done permitting, you've done all these sorts of things. Does that ever trigger these off-cycle reassessments where they say, oh, in 2025, somebody pulled permits, they did a whole bunch of work on this property. We're going to assess it at more than the sale value that was.
It's a great question. They have the right to reassess it. They don't always do it. So you never know. The assessor always has the right to reassess a property. But he doesn't always catch it. They always do it. So sometimes you get lucky. I always try to tell a client what their worst case scenario will be. That way you say, hey, if you can't handle this tax at this worst case scenario, this property is probably not for you.
Does fixing your driveway change?
No, because that's the land. You're looking at improvement value. So if you're I think the key is like knowing that, like, if you're changing the kitchen around, okay, or doing like that stuff, that's changing the value of your home for sales purposes. Okay. The building is still measured, on the outside of the building. And they're not sitting there valuing, like the cabinetry and all that stuff. They're valuing the actual property. Is it frame? Is it brick? Is it, how many bedrooms is it? How many bathrooms is it? All that stuff. They're looking at the hard stuff. They're not sitting there valuing, like delineating a value to each, piece of personal property within. That's all personal property.
So the biggest trigger would be if you're adding square footage
If you're
or
adding
something
square
like
footage.
that. Yeah, okay.
What about if you finish the basement?
So a finished basement gets assessed differently, as a full finished basement. So, they're not necessarily going to come in and see it. A tremendous portion of the houses that we represent have full finished basements that show up as unfinished on the assessor's page. So, the assessor might come to your door one day and say, hey, we want to look around your house. That's when you say you don't speak English.
Meters in our area.
Okay.
I've heard some people saying that whoever's changing the meter from the city was taking pictures of the basements.
And they can do that. They can take pictures.
And
Yeah. If they can see in,
because they go in and change the meter, right?
What is that, gas meters or?
No, water meter.
Water
Oh,
meters?
whatever.
yeah, I mean, I haven't heard anything about I haven't heard anything about that, but,
Okay. Okay, one other good question we got online was for off-market property sale. Can you use the sale price to reduce the tax, even
Absolutely.
though it's not publicly listed? in the open
Absolutely. So
market?
we would just collect the purchase contract and closing statement from a client and say, hey, this property, it doesn't have to be a listed deal.
Okay,
So, when a client closes on a property and if the sale is helpful, right away, I want to copy that purchase contract and closing statement. And if there's a supporting appraisal, I want those three things to submit in my appeal.
cool. Any other last question?
For you, it's free.
For the one person.
So
who asked the
it
question.
depends. So typically for a single family home, we charge a third. For commercial and industrial properties could be anywhere from 25%, depending on what I'm dealing with. Sometimes we'll call up and somebody has a portfolio of properties. Exactly. So if somebody has a portfolio of single family homes, maybe you get a discount or something like that. We have three of the largest single family home operators in the country that we handle. And one of them, I think, has 5,000 homes throughout Illinois. So that's, a daunting process. And so a lot of it for us is being the most technologically savvy firm, being able to handle all that property and having enough people to get through all these appeals and making sure that we're doing a good job and getting eyes on them by the attorneys and stuff. So, and on top of that, we're dealing with commercial and industrial properties. And so there's a lot going on. And so somebody here had asked me, this must be your busy season. It's always busy, always, because we're just preparing for the next, and I've been primarily talking about Cook County. Lake County all the Collier counties got reassessed in 2023. So there's a quad in there, by the way, they're assessed on a quadrennial. We're a triennial in Cook County. So Cook County is kind of like its own state within Illinois. There's 102 counties in the state. And so there's a lot of deadlines all the time. So we have somebody in our office who literally checks deadlines every day, all day.
Mhm.
So,
All right, last online question was, is it true mixed use properties have lower taxes?
they can. So it depends on, they're kind of changing that too. So a mixed use property, if you go and build a ground up mixed use property, there's a very good chance that the commercial portion will be assessed at 25% of market value. And then the residential portion will be assessed at 10%. Whereas a mixed use back in the day was primarily assessed at all 10%. You got the benefit of the commercial portion, got the benefit of, the multifamily portion. So, that's changed a little bit too. So it's not always true, but it depends how you're looking at the property. Every property is different.
Yeah. Okay, cool. Well, yeah, I think my biggest takeaway is, you can really use, the idea of taxes, assessed value being higher too, as a way to know that you're actually going to be able to come in lower when you're buying your
100%.
investment properties, right? I mean,
we
that's
have
my biggest
I
takeaway.
deal with clients all the time who, they look at the property taxes as part of their analysis for a purchase of a property. And they say, okay, this is a good property tax play. I know that my taxes are going to be low. I know that I'm going to be able to flip it because, if you have 3 houses in an area and, one of them, and they're all similar. Let's assume for a second you have 3 houses, they're all similar and they're all done by the same builder and same footprint. All right. Well, the one with the lowest taxes is going to be the most attractive. So,
Cool.
Yeah.
Well, yeah, Jimmy, thanks again for subbing in. I'm actually happier we got you than Zach. What's everyone's best way to get a hold of you?
Yeah, so
And-
I have
and
my
get
card
their
out there and
packages
Zach's information. So our website is sarnoffpropertytax.com. That's SARNOFF, propertytax.com. And then for houses, if you ever just want to sign up a house or you're doing it for a client or whatever, you just go to houseappeal.com. There's a ton of information there. And you for house appeal, like I said earlier, you could sign up right there. It'll send you a DocuSign right to your email, and then you're in our system and you'll be hearing right from us. Anything else and you want some special attention, give us a call. We're always happy to go through any type of property through due diligence for you. Not enough people take advantage of it because there's actually nothing more painful. Personally, you want to help people. Lawyers get their bad rap, but I truly enjoy, you were talking about true value and stuff. I truly enjoy helping people. And there's no better feeling than calling somebody up and being like, hey, I just saved you X amount of dollars on your taxes. And, you know, that changes lives sometimes. It changes a vacation for a family or something like that. You know, go through the process before you buy. Before you buy. I can tell you right then and there what the property taxes are probably going to look like at the end of the day. At least I can get you within the range of what it's going to look like. And not enough people do it, and they go in, they see these, you know, spectacular homes, and then they think, you know, they're going to be all good, and then all of a sudden the property gets reassessed and they get jacked up $20,000, you know, $10,000, whatever. It's hard to listen to sometimes because you're like, you could have appealed it, you talk to me, you know, or been on top of this, had you talk to me. So
All right, yeah, biggest action item, get a hold of this guy before you buy your next property. Yeah, so again, my name's Jonathan, Quality Builders and the Chicago Quality Investors. Always encouraging everyone to invite their friends so we can continue to grow our group and get other people like Jimmy here to give his expertise. So
I'll leave
you
my
guys can give
email too.
him a round of applause and
And, thank you.
sign off from there.
I'll leave my email too.
Okay,
It's
yeah.
just Sarnoff at Sarnoff Property Tax. You need anything.
You-
Thank you guys for having me.